Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese.
Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist. Taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.
And we are back. Welcome everyone to episode 120 of Carson's Facts versus Feelings. Ryan and Sonu here. Sonu, we've had some odd beeps before we started. I think we figured it out. If there's
hopefully
odd
it's
beeping,
gone.
I don't know. Yeah, there's a truck outside of Sonu's house doing some heavy work. I don't know. Maybe it's
so
DeepSeek.
If my internet connection goes, that's it. It's the Chinese. No,
it's the Chinese. It's DeepSeek. Yeah. So this is going to be a fun one. We're titling this one, Is Tech in DeepSeek? Get it there?
DeepSeek.
There you go. DeepSeek.
You don't want to get into trouble here.
Yeah, exactly. So there's a lot to talk about here. I don't know. I mean, the snow is thawing out a little bit. It's getting a little warmer. How's life in Chicago, Sonu? What's the latest up there?
So it's 40 degrees today.
Okay.
40 degrees. And after the run-up we've had. But last week I was in California. I was in San Jose. Goodness. Like every time I go to California, I have asked myself, like, what am I doing in Chicago? Like, this is crazy. Just move out here, right? Like, I mean, there's fires and taxes and, earthquakes, but still, the weather, right? The sun. Yeah, there's the sun. It's warmer. Anyway, there's some nostalgia for my 3-day trip to San Francisco. San Jose, really. So it wasn't San Francisco. But I have to say, inspiration from our friend Phil Perlman, I'm standing right now, right? I've had a standing desk for about 4 years, and I think I used it the first week. I was like, oh my God, I'm going to stand all the time.
Like a Peloton. It's like a Peloton kind of. Yeah.
Exactly. And I think it was during COVID. Definitely. So I got the standing desk, screens, all of that, everything set up. And after that first week, maybe 2 weeks, I've never used it, right? It's always been sitting down. My excuse is like, all my wires are here and stuff like that. It just screws everything up. But here I am. I finally got everything set up. I'm like, you know what? I have back-to-back meetings after this podcast.
Oh, my.
I'm going to stand. So here I am. Take a page out of Phil Perlman's book. So I don't look like Phil. I'm not as fit as Phil, but hopefully I can get there.
No, listen, that's maybe 3 or 4 episodes ago, we talked with Phil about setting goals and all types of fun stuff that Phil does. So that was great. I definitely hear some work. Is there something going on outside your house, Sonu? I hear drills and saws, and so we apologize for the noise. Chicago is upgrading the internet. You know what? I bet your internet goes out while we're doing this. Few things are more certain.
Dude, don't say that.
They'll cut your internet out.
I have a backup internet, so there is that.
Yeah, Sonu and I do it. We'll get into it, I swear. But Sonu and I do a morning call every Monday with our more than 500 Carson partners in 42 states, and we're up over $40 billion. And yesterday, my computer just forced me to stop. I didn't even know what was going to happen. We're just talking away. We're supposed to go 30 minutes, and everyone listens to this podcast. Of course, we go 45. There's a lot to talk about, right? So my computer just updated, and shut down. I said, I guess that was time to end our morning call. So sorry to our partners.
Was a sign. That was a sign. That, you guys need to shut up. But,
just like the sign of the snake. The year of the snake is a sign, too. But
tell me more.
Let's wait. We'll get into it. Let's get into it. All right. So again, welcome to episode 120, everyone. Is tech in DeepSeek? DeepSeek. See, I did that. Yeah, anyway, we'll talk about that. Markets, China, lots of stuff to talk about there. Maybe year of the snake, a little fun there, of course. Don't invest into zodiac signs, but everybody likes talking about it. But you can invest in a Super Bowl indicator. No, I'm kidding. Don't do that. That's a joke. It's a joke. We'll talk about that probably next week. Then we're going to dive into markets. Hey, it was an ugly December, ugly start to the year, but things have come back nicely. And then yesterday, being Monday, we'll record this Tuesday morning, was an ugly one due to the issues out of China with AI. We'll get into that. Talk a little bit about the Fed, maybe a little about tariffs. We'll just see how much time is left. But again, we were going to spend most of the time, I think, today probably on DeepSeek. Sonu, by the time most people listen to this, they can go to our blog, carsongroup.com/research. You did an amazing blog. You put out I don't even know.
It's long.
5,000 word note for our partners the night of this news and then this blog. I mean, you really, really dove in. I've got some takes. You've got some takes. Let's just.
I'm an AI expert now.
Yeah, no, exactly. That's the joke about Twitter. 5 minutes later, everyone's an expert. So what exactly?
Last week I was an expert on fires, and now
yeah. I mean, I don't even get it. So let's go this route. What I've heard is DeepSeek obviously spent maybe $6 million, a lot less than everybody else in terms of being efficient with AI. But it's open source versus a lot of these other ones are closed source. Let's kind of start there. What does that exactly mean?
So open source means that, look, their goal is to give everyone access. DeepSeek is this company in China, is a small company, but it's not tiny. It's not like they're working out of a basement or something. They've got a ton of employees, things like that. We'll talk about a little bit of the background, right? But yeah, general idea, look, some highlights of DeepSeek. It's open source. Their goal is to give everyone access to artificial general intelligence, AGI, as the acronym goes.
Yep.
DeepSeek. This is amazing, by the way, that I can stand and I'm moving around, I'm walking. You know,
we're gonna get the camera to follow you. You're gonna move all over the place.
Yeah. Sorry, not to get distracted. Look, and they're the only advanced AI team releasing cutting edge research, right, in papers, things like that. And the thing is, look, the chatbot. I know you use. I think you use. Mm-hmm. Grok, maybe. I don't know. Are we even allowed to say what we are supposed to? I don't know. Hopefully, I don't even know.
No, I don't use it. Never mind. No.
I used to pay
not for work. Not for work.
Yeah, not for work. Yeah. So I used to pay for
use AI to plan I used AI to plan a spring break trip. I said, start me in Vegas, end me up in Salt Lake City.
I did the same thing.
Give me 5 days. I mean.
It's great.
There it was. It told me what to do. It was amazing. Yeah,
it's great.
Within seconds. Yeah.
So I use ChatGPT lately. You know what I've been using it for? Like my daughter's really into Harry Potter.
Yep.
So I'm like, just to keep her occupied, I was like, okay, do you want to take a quiz? I want to find out if you've, read the book actually. So I just go to ChatGPT. Well, this is what I used to do until 3 days ago. So go to ChatGPT. I used to pay for it. Right. And just asking, give me a 10-question quiz or 20-question quiz trivia.
Yep.
And the kids love it, right? They're like, because they're a little competitive and, they're like, and so it's fantastic. Anyway, I used to pay for ChatGPT. I don't do that anymore because the DeepSeek chatbot is free. There are no ads, nothing like that.
There you go.
And it appears to be as good. I mean, look, I'm not a big user or anything like that. I'm using it for trivia, right?
Mm-hmm.
And planning spring break trips too, and things like that, right? But look, I think everything I've read about DeepSeek's chatbot, it's number 1 on the App Store right now. It was yesterday. I don't know if that's the case today. And I think it broke the App Store because it couldn't download it anymore, right?
Exactly.
But it appears as good as other chatbots. It allows you to see one thing interesting. It allows you to see how it's thinking as it gives you an answer. Like, this is why it's sort of like, you do a math problem and the teacher tells you, show your work, right? So it's like showing your work too. Whereas with ChatGPT and the others, which are very good, I should say, it's not like the DeepSeek has gone ahead of them, but they don't really show your work, right? So in some respects, I think, I could easily see how I would trust the answer from DeepSeek a little bit more. And then because it's giving you its reasoning, it also helps you tailor your queries, your next queries, slightly better, and then you can get better results, right? But the other big thing, I mean, irrespective of, 6 million, they have 6 million versus 60 billion.
Yes.
That's Facebook and, OpenAI and all these people are using.
A week ago, there was a $500 billion conglomerate that was invested. This is a $6 million. Now,
wow.
What I've read, and people read the same thing. Maybe they spent more than $6 million. They might be fibbing a little bit. Yeah. But the reality is they're using old chips just laying around, apparently, from NVIDIA that weren't even the best chips. And they came out and, it's just
exactly.
It's really kind of broke tech. And we're going to get into all that.
And either way, ultimately,
yeah.
Ultimately, the pricing is cheaper. And this gets to, the impact of this, right? I think this just makes AI more it's cheaper, which means more people are going to use it. The API pricing, application programming interfaces, that's what API is. For DeepSeek, it costs, I won't get into what tokens are, things like that. Think of, if you put in a query to a chatbot saying, give me 10 questions on Harry Potter's Prisoner of Azkaban book, right? That is maybe 10 to 12 tokens, something like that.
Okay.
So ChatGPT's API, for input tokens, per million input tokens, it costs $15.
Okay.
DeepSeek is 55 cents.
What?
Right? And per million output tokens, which is the output they give you all the 10 questions, things like that, whatever it is. For ChatGPT, per million output tokens, it's $60. For DeepSeek, it's $2.19. So right there, it's cheap, irrespective of how much it costs and things like that, whether you buy it or not, whatever.
And
right?
Let me just jump in for a second. And maybe you say, give me 10 questions to this AI chat box, this AI. I mean, maybe it's not as good. Maybe it's 98% as good. But when you mentioned the prices you just mentioned, that is why literally, I did see, at least as of yesterday, it was not in the top 10 on the Google App Store, but it was number 1 on the Apple. Now, maybe by the time we're recording as it is, I mean, I made the joke on our morning call. It felt a lot like how you go bankrupt, right? Very, very slowly and then suddenly.
Yes.
We've been hearing about DeepSeek for like a week or two, and then all of a sudden, it's all anybody talked about. Go ahead, Sonu. Yeah.
No, I'm looking at the App Store right now, so let's see what the must-have apps. But DeepSeek still up there on the Apple Store. You know, amongst the free apps, right? DeepSeek. Second one is ChatGPT. So there you go. Still there. And what do you want to talk about? We can talk about some background about DeepSeek if you want to get in, or we can talk about the sell-off markets.
Yeah, I mean,
where do you want to go?
Just some notes that I had scribbled to myself here. They use 2,084 AI accelerators, and in less than 2 months, for under $6 billion, they've created this chat box that is just as good as the one that people are spending like hundreds of billions of dollars on potentially.
Wow.
I mean, you know, OpenAI has spent $100 million, is what they say, according to some of these numbers.
And they won another $500 million from Stargate, right?
Yes, Stargate just a week ago. So some more context around this. NVIDIA was down 17%. Now, they've had bigger one-day drops, but on a market cap basis, Sonu, down $599 billion, largest single one-day drop market cap ever for any company in history. If you look at like the 10 largest drops ever, NVIDIA's now got like 8 of them. Not a shock. It's a huge company that's been volatile. But that like doubled the previous largest one-day drop. Oracle down 14, Broadcom down 17. And then your utilities, right? Vista and Constellation Energy, which have soared on AI power, needed for power. One of those was, let's see, Vista's down 30 and Constellation down 21. I mean, it was just a bloodbath. But then if you look, one more thing for me, I want you to jump in. If you look at S&P 500 equal weight, up yesterday, up only a couple basis points, but up yesterday. The S&P was down 1.5%. If you look at the NYSE, 57% of all the stocks, I think 1,700, 1,800 stocks on the NYSE were positive in the middle of this bloodbath. You
350 stocks in the S&P 500.
350 in the S&P 500 up. 22 Dow stocks were up. And of course, that's out of 30. Junk bonds were up just a little bit. The U.S. dollar was down a little bit. If this was a true calamity, and we talked about some of these similar things in early August, we'd expect the dollar to be soaring. We'd expect junk bonds to be selling off, or junk high yield, whatever you call it. We didn't really see that. So under the surface, it really wasn't that bad of a day. And I do want to read one tweet that I did, and who knows if I can find it. Let's see here. Well, I've got it somewhere. It was like the greatest tweet I've ever done too. If I
can find it on my end because
here it is. Yeah, this is. I'll just read this, and so I want your take. I tweeted this. In an alternate universe, these could have been today's headlines. Of course, on Monday, the day that was just an absolute bloodbath for technology. Tech was down 5%, by the way. Financials closed an all-time high. 22 out of 30 Dow stocks closed higher. Transports soar 1.5% to an all-time high. The Dow is less than 1% from all-time high. Apple posted its best day in 4 months. Amazon all-time high, Meta an all-time high, 350 stocks, the S&P higher. Momentum stocks are up 7% year to date. Small caps and mid caps actually outperformed in that bloodbath and are now up more than the S&P 500 for the year, and high yield closed higher, suggesting no credit risk. Those were not the headlines that we saw yesterday, but in an alternate universe, maybe it wasn't that bad. If you're in tech, and I get it, so many investors are, and it's been a great place to be. That's why we're talking about it, but that's also why we've been stressing keep a diversified portfolio. Don't go too overboard technology. We're more even weight. I mean, you know, because you could have these.
We literally had that in our outlook.
Yes, we just talked about it repeatedly, and you know, in our models, the money that we run for our Carson partners had a pretty darn good day, all things considered. You know, on Monday, I know it was a bloodbath, but hey, you know, it's kind of how you're investing. Also, we weren't all in technology necessarily. What do you want to add to some of that stuff?
No, just to some context around it. Look, the good news is the costs are going to be much lower for AI, right? And that's going to pull in a lot more users. And you know, like I always like simplify it, but I think it stands. One person's spending is another person's revenue and profits.
That. Is that your quote? I'm going to quote you. Is that yours? No, I like it.
I'm sure.
I like that. I'm sure somebody, probably Mark Twain, you know, I mean, be careful what you read on the internet. But anyway, yeah.
You can't go wrong by attributing anything to Mark Twain.
Exactly. So, or General Patton. He's got 1,000, what is it, 1,010 biographies on General Patton. I think he's got everything under the sun taken already. But
so there you go. One person's spending is another person's revenue and profits and profit margins, things like that. So falling prices, what does that mean? Companies providing this AI infrastructure could potentially lose out, right? And I think there are a lot of questions here. Like, look, are the Chinese ahead of the U.S. in AI? I don't think so. We'll talk about that, right? Okay. But again, like, it's not like I'm an expert here or anything, even though I play one.
Well, you slept at a Holiday Inn Express last night, so I think
there you go.
You're as good as we could get in a one-day notice. We asked a few people. We couldn't get anybody to join us. So.
There you go.
Yeah, you get us, everybody. Sorry.
There you are. So do U.S. firms continue spending billions and billions of dollars on CapEx and chips and things like that? I think yes. I think this accelerates it, right? People are going, oh my God, we need to catch up. We may get behind. What do? Throw more money at it, especially when you have the money, right? And the big tech companies have the money. Now, which firms are the winners and who are the losers, right? That gets to, I honestly think I don't want to say, well, I'm going to say it. I think it's a bit of a mug's game. It's very hard to pick out, okay, who's going to win? Is it NVIDIA? Right. Is it going to be the loser? Marvell fell 19% yesterday. Again, not a recommendation to buy or sell any of this stuff, right? But even the power companies, you talked about Constellation Energy falling almost 21%. Why? Because they inked their largest power purchase agreement with Microsoft last year. They're going to restart 3 Mile Island, the nuclear power plant there, to provide power to Microsoft for AI workloads, right? Talon Energy, they did the same thing. They have the Susquehanna nuclear plant down in Texas, I believe. They partner with Amazon to provide nuclear power for AWS and AI. That was down 22% yesterday, right? Yeah. But to your point, other tech companies gained. Apple was up, Meta was up, Amazon was up a little bit, and 350 stocks in the S&P 500 were up as well, right? So all said and done, I think this was a deep sell-off.
Nice job.
But it wasn't broad, right? Far from it.
So, what I've read also sleeping at a Holiday Inn Express last night was Apple was kind of knocked for not going head over heels into AI. And then, okay, so
they look smart now.
They look smart now. And Meta actually has been working on an open source AI. So that's kind of the lane they've been working already. And that's why those two stocks, now Amazon maybe just went up because every time I walk in my house, I trip on a box. But nonetheless, that's some of those reasons that those did well. What other things do I have here, Sonu?
Actually on that, I think, like I said, DeepSeek makes it more likely, right? That you get more usage. And who is it? Satya Nadella, the head of Microsoft.
Yes.
Right? At the end of the day, look, as I said, I think U.S. companies are going to throw more money at this. It's not going to be like, China's done, China's matched us. We're going to step back. No, right? It's going to be literally opposite. There's probably a fire under everyone's bottoms in Silicon Valley right now, which means what? Let's throw more money at it. As I said, everyone has a ton of cash flow, right? But this can lead to more demand as well, because if it gets cheaper, and this is what Nadella tweeted. He said, he tweeted something called Jevons paradox.
Oh, I was going to bring this up. I was going to bring up Jevons paradox.
Yeah, sure. So what it says is, like, look, when technology advances, when you get more technological progress, it makes that technological resource like AI much more efficient to use. But as the cost drops, demand goes up, and that causes resource use to increase. You need even more infrastructure. Maybe you need more chips, right? And that's what Nadella is getting at, that as AI is more commoditized, we need more of it, right? Now, some of this can be, cope. As well. Remember Microsoft, which is, that's when Nadella's ahead of Microsoft.
Sure.
This is a big partner of AI and part of Stargate, OpenAI, I should say. So, but anyway, there's some cope, but there is some truth to this as well. I'll put it that way.
Yeah, I don't think it's like when Blockbuster said, no, Netflix, we don't want to buy you. We don't think there's any future there. But yeah, I was going to bring up Javon. Is it Javon's? Javon's paradox?
Jevon.
Apostrophe S. I just know this, like in terms of Google searches on Monday, nobody ever searched for that thing. And then he did that and everybody was talking about it. But it makes sense, It's like, if an energy, at least the definition I saw was like along the lines of an energy source gets cheaper, more people are going to use it. It becomes more efficient, and all of a sudden, all these other platforms. Dan Ives, big fan of Dan, big friend of the show. He was along these lines. He's big NVIDIA bull. Again, not a recommendation on anything here, but he was saying, listen, this is probably good for a lot of these tech companies. Yeah, they were just crushed, but again, as more
investment and usage, I guess is a better way to put it. I mean, the other thing that's, I forget who said it. I read so much about this. They said, if they could do this with the old NVIDIA chips laying around, imagine what they could do with the new ones. Yeah. So maybe there's more demand. You want to go buy those new ones.
Exactly.
But correct me. I fill me in here. But then you hear some of the quotes coming out of China, and, do you trust them? Do you not? That they weren't even allowed to use the new NVIDIA chips because of some rules with the U.S. Is there some truth to that, Sonu? You get a chance to look into that?
I think so. Like, they had an older chips. Remember the export controls, right? The Biden administration put on the chips. That actually the real big ones went into place October 2023. Okay. So, before that, they had chips, and who knows how much they've had. Yeah. But look, at the end of the reality is they're charging less for this thing. And this thing looks just as good as what you get from ChatGPT and things like that, right? So that's it. It doesn't matter how much it costs. Like, maybe the Chinese government is paying or putting chips under the ocean or in Singapore or somewhere. Who cares, right? It's cheaper to use. That's it. That means everyone's going to be using more AI. It's going to diffuse across the economy more, faster and cheaper. And look, the other thing about, you brought up China and the issues around China. DeepSeek is open source, right? Which means there's the question of, can you ban it?
Well, that's TikTok. What I was going to say. I was actually going to ask. Let me ask that. I was going to say, we hear TikTok going to ban it. It was banned for like 7 hours last week. My kids all had no idea how to live their life without 7 hours of TikTok. But then you hear they can't really ban it because it's open source. Is that the way that works? I guess.
Yeah. So what it actually is it's a large learning module, right? So LLM, that's what it's called. That's what runs the chatbot. So this thing on the App Store, that's number one on the App Store, the DeepSeek, that's the chatbot, right? They can ban that. Okay. In fact, people have been asking these gotcha type questions, like asking, like, oh, tell me more about Tiananmen Square. And that chatbot says, no, I can't, or it doesn't give a response, right? But that's besides the point, and it's irrelevant because it's open source. Somebody can download the entire model, put it on their computers. You can literally train it to be anti-China.
Right.
Right. So I think Joe Weisenthal at Bloomberg pointed this out. Like, the open source version, which is the whole point. It's open source, right? You can download, run it. It's not censored. Ask it whatever you want. So this whole point about, it can't answer these questions about China. Like really? I mean, you can't find answers to your China question somewhere else. You have to ask the chatbot for that. And look at Wikipedia, right?
Well, I was going to say something. Yeah. I mean, I asked, DeepSeek, the greatest actor ever, and of course it said Sylvester Stallone. So I was like, of course it's right. I mean, obviously it's right. I'm gonna sidetrack this just for a second. So I've been watching Landman, and it's really, really good. I'm 7 episodes in. Have you started it? Or you?
No, I haven't.
Billy Bob Thornton. He's just great.
Oh yeah, he's great.
It's the ultimate role for Billy Bob, running around smoking cigarettes, just bending the rules, and being Billy Bob. Big time oil man. Anyway, so I really, really like it. But I'm going to say something that's controversial. I'm going to say something that I don't think very many people are going to agree with, but you know what? It's my podcast. I'm going to do it anyway. I like Landman a lot. I like Tulsa King more. I think Tulsa King, which are both Paramount Plus, I don't know if that's even publicly traded, not a recommendation, but I like Sylvester Stallone and Tulsa King just a tad more than Landman. Everyone's going crazy on Landman. It's good. Now, maybe I got to watch the last 3 episodes of this, but both of them are good. I mean, how about this? Paramount Plus, where'd that come from? Those are like 2 of my favorite shows, Tulsa King and Landman. They're both awesome. So anyway, let us know. Send us an email, facts versus feelings at carsongroup.com versus VS. Is Landman or Tulsa King better? Go ahead.
I have a funny story about Tulsa King. So my daughter comes to me, this is maybe a couple of weeks ago, and I'm like, Dad, have you seen Tulsa King? I was like, what?
It's not a show. Not a show for her.
How are you even asking me this, right? Like, I haven't seen it. It's on my list. For some reason, I just haven't got around to it. There's so much stuff on TV. So much. Yeah. But, so I'm like, how did you come up with it? It's like, no, I saw it. There was some ad or something that she saw somewhere. And she asked my mom about it. It's like, yeah, that's your dad's favorite actor. He's Rocky. That's the connection, right?
There you go.
There you go. Like,
awesome.
Anyway, hopefully that'll be the ultimate test for DeepSeek.
Yes, there you go. Let's reel this in and maybe put a cherry on top. Looking at time, we're doing pretty good time wise. But I guess the title to our podcast is this. Will DeepSeek be an issue for technology? I mean, technology was crushed on Monday. The time we're recording, it's bounced back a little bit. We're more even weight technology. We've been saying that for a while. Honestly, it kind of was aggravating as tech continued to go up. But then the second half of last year, tech kind of didn't do all that great, especially relative to the market. So this weakness is nothing new. But what's your take? And I know this is, hot off the presses.
No,
what do you think on technology's point of view? Answer the question of our podcast.
Yeah, and let me digress, since it's a podcast as well, since we have time. No, I'll try and put it within a broader global macroeconomic context, right? And China too. I think, no question, what this tells us, China is a tech powerhouse, right? Yeah. We've talked about this before, I think several episodes back, they've already eaten everyone else's lunch when it comes to electric vehicles, right? We talked about that. Yeah. China, 5 years ago, they were exporting just under 1 million cars. 2024, they exported 6 million cars, both, especially EVs. They've got enormous capacity to produce cars. Over 40 million internal combustion engine cars a year, 20 million electric vehicles a year.
Wow.
That means China has this amazing capacity to supply over half the global market for cars. Globally, 90 million cars are sold every year, right? Now, China doesn't have a lot of demand, so what do? They export all this stuff. Essentially, I don't know if this is maybe a little bit of a strong statement, but I'll say it anyway. I think they've more or less destroyed Germany's auto manufacturing sector, right? Okay. So no question, China is a technological powerhouse, right? Yeah. And then coming to your question, is it coming for U.S. tech? Is U.S. tech in trouble, right? Yep. Great competition. Now, manufacturing, yes, they've sort of killed Germany's auto sector, maybe all the auto sector in large parts of the world. It's not come to the U.S. yet because we have tariffs on that. That's a lesson in and of itself, maybe instructive, that one way to prevent Chinese goods coming in or Chinese know-how coming in is to somehow put export controls, tariffs, things like that, right? I mean, not a recommendation, but we'll see where that goes. But look, manufacturing, as we've talked about before, not a big part of the U.S. economy, right? The question is China coming for U.S. tech now? Now, DeepSeek the thing is, I think it was Mark Andreessen, right? The big venture capital investor in Silicon Valley. He put out a statement saying, this is AI's Sputnik movement.
Yes.
Right?
Yes.
Right? And so going back to, remember what Sputnik was? Sputnik was launched by the Russians, the first orbiting artificial satellite to go around the Earth. And that was in 1957. But that's when America realized, oh no, we're far behind, right? Now, America did catch up in a year. Oh, yeah. They launched Explorer 1 in 1958. But this is a little bit of a different situation. The Americans, we're ahead. And now it seems like, the Chinese have caught up, right? And that, OpenAI, Google with Gemini, all of them are probably, yes, the stuff they put out there is great, but they probably have more stuff, in the lab, right, so to speak. So I don't think you can't count the US out by any stretch of the imagination, right? And this gets to, like, the broader context here is a lot of the focus right now is like, who's going to win? Who's going to lose, right? Like I said, that's a bit of a mugs game, I think. Thankfully, you and I don't have to play that game, right? The big picture is, what is it? I'm actually more bullish about the economy after this because now costs are going to be cheaper. AI is going to diffuse, as I said, across the economy much faster because of these lower costs. I think U.S. companies ramp up spending on AI more and more. And remember, as I said, one person's spending is another person's revenue and profits, right? That's good for the economy. It's good for productivity. Now, I think, someday we'll talk about this. There's a huge ramp up in CapEx coming. It's already happening, I think. That could create problems down the line, but that's a question for another day, right? So when people ask me, like, how do I invest in AI? I'm like, are you invested in the S&P 500? Yeah. Yes, you are. Yes, right? Which means you have 35-40% in tech. And as we wrote in our Outlook, as you mentioned earlier, that's a big bet right there. Like, do you want more? Do you want to add to that? I don't know. We don't. We're neutral on tech. We don't think there's any reason to add more to it. We think there's going to be a broadening out of the bull market. Like I said, I'm actually more bullish after this news. I think because costs are lower, everyone can use AI more easily and cheaply. And I think that's good for, the economy. That's good for small caps, mid caps, and every sector outside tech.
Well said there. It's kind of like the movie Moneyball or the book Moneyball. If those of you remember, Billy Beane, the old GM for the Oakland A's. Oakland A's didn't have any money, right? So they had to think differently. They had to scout players differently. They had to run everything differently. And the whole movie is about how they go up against the Yankees and beat the Yankees. Now, they don't win the World Series, but what soon happened was everybody looked at what Billy Beane was doing using analytics and they all started using analytics. So, who knows? Maybe everyone's going to look at what obviously DeepSeek is doing and try to do some similar things, throw a lot of money at it.
And maybe you got a more competitive league. The only thing, Ryan, you have to tell me, why can't they use a chip in a football?
That's a very good question.
See, connected sports to chips.
Every Bills fan is wondering how that wasn't a first down. Some theories. There are some theories on that. But yeah, good question there. Trust me. I think we're all now my head's spinning. So this is the year of the snake. The time people listen to this, Sonu, year of the snake is here. There's 12 signs of the zodiac. We just ended the year of which one was it? It's the dragon. And we jokingly said, again, don't invest in this stuff, but it's kind of fun to talk about. Tom Lee pointed this out, but you pronounce dragon long. And historically, horned animals. I think I might have been one of the only people to point this out. Horned animals. I remember that. Historically, my friend, good buddy of mine calling me. I'll have to answer him in a little bit. I said horned animals tend to do well. Goats, oxes, dragons. I can never invest in this stuff. But they tend to do a lot better. And then we had a huge rally, obviously, last year, thanks to Long and the Year of the Dragon. Now, people tell me all the time, Ryan, you're always bullish. I say, yeah, in a bull market, the data tells me to be bullish.
What do you want me to be?
The data change, I would share. So here is something for all my bearish friends. Year of the snake, Sonu, since 1950. The S&P is up only 50% of the time and up 0.8%. And we're going to put this chart up right now. So, Drew, let's mark the time down. I'll get you this chart. This is the worst year to invest, is year of the snake. So there you go to all my bearish friends. I gave you something. Year of the snake says to be bearish, but listen, we're not listening to that. We're ignoring that, obviously.
Is it a quad snake?
Yeah, I think it's the wood snake, isn't it? I think it's the wood snake.
I was joking. I was going to say quad snake, but we won't go there.
I got you. Yeah, I got you. But so anyway, kind of a fun one. But that's that. There are some other reasons maybe to be worried and bearish, and I'm probably going to write a blog on some of those. Probably by the time most people listen to this, I'll have a blog also. I'll talk. There's some other worries that are kind of creeping up a little bit.
I was thinking, as is a trivia question for you. Mm-hmm. Now, speaking of ChatGPT and trivia and all that, and chatbots. I was actually trying to think of what year was my year, the year I was born. I was like, wait a minute, that's the same year you were born. So I'm going to ask you, what was your zodiac year?
We're the horse, aren't we?
It's a horse, yes. Right, okay. Yeah. Yes, horse. It's 1978.
So let's see how's the horse. Ooh, we're not very good. Horse is up 6.3%, higher 2/3 of the time. Again, goat's the best. Then there's ox, dog, pig, rabbit, dragon, tiger, monkey, horse, rat, rooster, snake. So there you go.
For what it's worth, don't listen to us. No, listen to us.
Yeah, listen to some of the stuff we say, but not.
And leave a review, right? If you.
Well.
Yeah, let's do that.
How do we do that? Let's see here. Where is that? I've got 19 things open right now. Let's see here. Let me read this. Here we go. If you want to hear the latest from us, don't forget to subscribe to our podcast. You can also leave a review. We love your feedback, and that really does well, helps with those algorithms. And we've started to share more charts on the YouTube channel. Listen, 2 weeks ago, we had, 15 charts. I don't know. Thanks to Drew, our producer, for putting all those charts in when we did our Outlook. We've had some really good downloads the last couple of weeks. YouTube channel had some really good traction. Things are a little slow in December, maybe just end of the year. People just taking it easy, but we've picked it back up. So thank you for sharing and listening to our podcast. Yes. Let's see here. Oh, what do we get here? Oh my goodness.
What is that?
John Maynard Keynes. That's one person's spending is another person's income is often attributed to economic theory of John Maynard Keynes. So I get thanks, Drew, for that. So
thank you. It's not a bad guess after Mark Twain and Patton. Right. Go with Keynes.
But I've always said my favorite quote from him is, "In the long run, we're all dead."
There you go.
Always found that quote kind of funny from him. He's got some other ones. I think his other one is when the information changes, sir, I change my opinion. What do you do, sir?
Yeah, what do you do?
What do you do, sir? Something to paraphrase it, but that's another very famous one. All right, so look at the time, maybe 10 minutes or so here.
What do you want to talk about?
I don't know. We kind of talked markets. I mean, I guess we kind of talked markets. I mean, We'll see, but we're probably going to have a higher January. We'll talk more about this next week, but so goes January, goes the year, and January's higher. And the first 5 days, talk about that last week, when the first 5 days are higher, tends to be a positive. So those are some good things. Market breadth is good. Financials are strong. Yes, tech is weak, but we are seeing some dispersion. The fact that utilities are down, I believe, 4 or 5% yesterday because of those huge drops in the big names. Mm-hmm. utilities tend to be more defensive. Now, this is a big asterisk on it because I know they haven't really been defensive lately because people played them as an AI. But still, if the end was near, I think we'd get more of a bid in utilities. We get more of a bid in the dollar. We did get yields going lower. The U.S. dollar was a tad lower on Monday, surprising probably most people when you woke up on Monday morning because that calamity was being promised. Those are some big picture things on the market. I don't know if I want to add too much more on markets. We want to talk about the Fed. You want to add anything on markets? We talk
just
Fed,
markets.
Tariffs.
I mean, just year to date through. Okay. I mean, we're recording this on the 28th morning, Tuesday. The S&P 500 is up 2.8% for January year to date, despite what happened yesterday. That's not bad. Yeah. But going to your point about breadth, mid caps, and remember, I've talked about this before, how like the equal weight S&P 500 is sort of like mid cap and drag. Mid caps are up. The Russell mid cap index is up 4.4%.
Wow.
How about that breadth, right?
And nobody is talking about that.
Yeah, nobody talks about
that. Nobody's talking about mid-caps doing well. And in our portfolios, I mean, we've liked mid-caps for a while, and that's still one of our kind of bigger bets. Am I correct there, Sonu?
No, absolutely, right? Yeah. And I have one question for you. I mean, one thing really positive, especially this year, amongst the top sector is actually healthcare. I was going to ask you about healthcare, whether you view it as a defensive sector or something different. And the other positive thing is that what I like to see is financials running up. That tells me the cyclical economy is doing well. Banks are doing well. Banks play a big role in the economy. Financials are up just over 6%. But let's go back to healthcare. Does that, like, if staples are doing well, I know what you'd say, like, that's a little concerning, staples, utilities, things like that. What about healthcare? Because, you can think about healthcare as a little defensive, but maybe not.
Healthcare is that one that's got a little bit of everything in it. I mean, there's biotech. Of course, biotech is risky. Then there's old-fashioned drug companies, which tend to be a little more safe. So healthcare is a group that I know is really cheap. It's underperformed. We haven't really all liked it. There's been a couple fits and starts with it. It's just kind of like I want to see some relative strength before I become more comfortable on it. But it is a cheap area that's gone nowhere for a while, and sometimes that can be a good thing. You just need a reason to get moving. And I'm not saying what just happened is a reason, but healthcare did just perk up. And Staples actually had a really big day on Monday also, so we'll see. I mean, it's just one day, but those are some things. But I love what you pointed about financials, right? We've said all last year financials were probably our favorite group all last year, and we came into this year still our favorite group, and it's still doing well. Then you peel back that onion. Regional banks are really strong. I mean, yes, the big super JP Morgans, Wells Fargo's, and all those big ones. I think we mentioned last week how strong their earnings were. Like 6 big banks, money centers came out with really, really good things to say about the economy, about the consumer, about earnings, all that. I mean, even Jamie Dimon, he seems like he just loves to be skeptical every time you put a camera in front of him. He's not
saying a hurricane is coming, right?
He even seemed kind of optimistic. So that tells you something right there. But what was I getting at? Regional banks. But, if regional banks, which is a small part of the market, yes, but, they're that canary in the coal mine. I think if there was really trouble coming, regional banks would start to break down. That's why, again, March of 23 was pretty worrisome. If regional banks start to break down, who gives loans to small businesses? Regional banks. Who employs more people than large companies? The small businesses, right? I mean, there's like 55% of all people are employed by a small business, approximately, close enough for government work. But that matters, right? And the fact regional banks are still strong is Mr. Market. I'm an old school John Murphy guy. I've got a CMT behind my name. The message of the market. I am not smart enough to know what's happening, but I do see trends and I see the leadership. And when I see financials leading, when I get choked up talking about this.
There you go.
When I see regional banks leading, those are the areas that I think, hey, that's a healthy sign. I mean, last comment on this, everyone remembers, I think, well, maybe not. Who knows? Maybe not. In 2007, the market was doing pretty darn good. In August, I believe August of 2007, market made a new high. But if you look what was happening, financials are breaking down significantly under the surface. And that was a big warning sign that something was wrong. Because, listen, is tech probably the most influential group? Probably, because it's the largest part of the S&P 500. But I would argue, the most important is financials. Because financials are breaking down. That might mean something really is in trouble under the surface. And, hey, they're hitting all-time highs. We've been overweight that group for a long time. We still like it. Probably one you want to accumulate on pullbacks, which are going to happen eventually here. But to see that leadership coming from financials is it's just a great sign, and a good sign, I think, for the lifeblood of this bull market, which this is still. I mean, last week the S&P hit an all-time high last week, first all-time high of the year. I mean, who knows? By the time people listen to this, the Dow might be at all-time highs, only 60 basis points away, even on Monday's scary day. So, yeah. All right.
right. Well, Sonu, what else about markets? You want to talk about the Fed and tariffs, or what do you want to do?
No, I don't want to talk about tariffs.
Yeah, we won't say much. We talked about them last week. I don't know. They keep changing.
I mean, we'll probably be talking about tariffs every week now. But just one last additional point to underline what you said. You already brought it up, but I think it fits nicely to what you said about regional banks and lending to small businesses. High yield, right? You mentioned the top. Yes. High yield is another, kind of like that. If high yield spreads are going up, that means credit investors are worried about small companies or junkier companies' ability to pay back loans. That's not the case. Far from it, right? Yep. And like I said, going back to the big picture for this, DeepSeek thing, to put a bow on it, it's not about the winners and losers. Like I said, I don't know. I think that's a mug's game. Who knows, right? The market will tell us at some point. Maybe you'll know only 5 years from now. But I think it's positive for the economy. I'm even more bullish now, to be honest, after this news, right? So, but now let's talk about tariffs.
Well, let's start with the Fed. I mean, maybe let's start with the Fed, because again, by the time people listen to this, we're assuming the Fed did nothing, to be honest. I know our buddy Tom Lee of our Fund Strat saying he thinks the Fed might come off a little more dovish, potentially. Remember, the Fed was kind of hawkish back in back in December, and that's why the market really took it on the chin to end the second half of December. We've talked a ton about inflation. Inflation, we think, is improving. What do you think? I mean, again, we're pretty safe to say there's going to be no change, but what's your message going to be, you think, here, Sonu?
No change, and I think this is going to say we're going to keep an eye on the data, so blah, 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 same thing. Exactly. So out of left field, I think the big question will be, what do you think about President Trump's call to lower interest rates?
Interesting.
I think that's going to be because the big man is going to come out and say, rates are too high. Look, this is a real estate guy at the end of the day, right? At least that's where he got his chops, things like that. He's like, real estate guys like lower rates. I mean, because they know that higher rates lead to, it's more expensive to borrow and build and things like that. And I think Trump is a builder, and he's like, I want lower rates. So I think that pressure is going to come on Powell. And I think it's pressure Powell will, withstand, but he's just going to stoically stand there and say, I can't be removed from office. I'm not going to resign. And then there's not going to be political pressure. But there is, right? At the margin, Trump comes in and says, we need lower rates, right? You can't have mortgage rates at 6.5%, 7%. That's hitting parts of the economy. That means I want 3% growth, but I'm getting only 2.5% or 2% growth because housing's not doing that well, right? So I think that pressure is coming. I think a lot of some questions to Powell tomorrow will be we're going to get boring answers, but the questions will be, what do you think about President Trump's call to lower interest rates, right? And he's going to just fall back on, he's just going to follow the data.
It might be just get your popcorn, I guess. It reminds me of the old Greenspan quote here. I Googled it real fast. I know you think you understand what you thought I said, but I'm not sure you realize what you heard is not what I meant. So anyway, just kind of confusing.
I need to write that down.
Just a bunch of words, a bunch of gobbledygook, if you will. Greenspan was the best day. He'd say a bunch of stuff. Everybody nod their head. Like, what did he just say? I don't know. We kind of do that on this very podcast. 40 minutes later, what did they say? I don't know. All right. So we don't need to say much more on the Fed. We'll probably hammer it next week. And then there's tariffs. February 1st is coming. 25% on Canada, 25% on Mexico. Maybe not. And then over the weekend, the issues coming with Colombia, which you pointed out is not just coffee in Colombia. It is something called roses come from Colombia.
I didn't know that either.
Valentine's Day is right around the corner, everybody. So, of course, it's political. Trump and the president went back and forth a little bit, but apparently calmer heads prevailed. What's your take on the latest tariff drama?
I know. Colombia, this I didn't know. I knew they exported oil to us, and they export something called heavy crude oil. Yep. And what the U.S. produces, you think, wait a minute, I thought the U.S. is self-sufficient with oil, right? Now, here's where I need to watch Landman and get some oil insights from, Hollywood.
You might be shocked to hear this. It's not just about oil. There's a bunch of drama, a bunch of silly stuff happening. Yeah.
But anyway, now I definitely have to watch it. But no, look, the U.S. produces a lot of something called light sweet crude. Yep. Right, without getting too much in technical, but a lot of our refineries.
We like our sweets. We like our sweets. So that
you and I both.
Sense.
You and I both.
Very true. Very true.
Right. Just don't put tariffs and Denmark for not giving us Greenland, right? Because that's how Ozempic and all that stuff.
Real fast, gonna hijack this. I pull in to get gas. Exactly. I pull in to get gas the other day, and I pull the thing out, put my credit card in, pull the thing out, and I'm trying to put the thing in. It wouldn't fit. I pulled up at a diesel area. I didn't even really say it though. Like usually it's like all different colors, and
it doesn't go in.
It was
right.
It didn't really. Oh no, it didn't go in, which is probably good because I probably would have blown my car up. I mean, but it wouldn't even go in. I did the credit card, everything, but usually it's like marked clearly. I was like, what is this? It didn't even really mark diesel, so that I had to go. Actually, you know what I did? Because I'm a stubborn old man like this. I said, whatever. I left. I went to the gas station across the street. It made me mad because they made me do that. So I said, I'm not going to give you my money. I'm not going to say where it was, but well.
So
anyway, go ahead, Sonu.
Yeah, we talk about oil. Yes, that's a connection.
I don't know where we're going. I don't know where I'm going with this.
Yeah, talking about with gas stations.
I don't know. We're at the end. You can tell. Yeah.
But all this to say, our refineries they refine oil, oil into gasoline, diesel, things like that, and they use heavy crude as an input, right? Whereas the U.S. produces mostly light sweet crude. Where do we get heavy crude from? Everyone else, right? Especially Canada. Speaking of, please don't put 25% on tariffs on Canada, because that means you're getting tariffs on oil, right? So trust me, we don't want that. That's why I'm skeptical that we'll get 25% tariffs on Canada, let alone Mexico. But even Mexico gives us highest, this low grade or heavy crude. But so does Colombia. Colombia is, I think, our fourth biggest. Colombia is the fourth biggest producer that we get oil from. So, and then roses, right? But then, see, I think a lot of it is posturing, right? And it was not even like, you go in and read it, I'm like, this is ridiculous. This is what we spend half a day on Sunday afternoon talking about. Because the Colombians are like, oh, you can't send us, immigrants or deportees on a military plane. It has to be on another plane. And then we'll send you a presidential plane, and we're like, no, you need to take this. Like, come on. Like, what are we even doing here? Yeah. But the other thing, so this is, I think, a little more serious. So I saw on my Bloomberg that President Trump's Treasury prick, Scott Bessent, is backing universal tariffs. So on U.S. imports starting at 2.5%. Okay. And apparently they wanted to move higher by the same amount each month. I'm like, what? I don't even know. Like that would be crazy. Universal tariffs every month. It's almost like, okay, inflation 2.5% every month. It's going up, right? That's literally the definition of inflation. Prices going up month after month after month. But it's interesting. I thought Bessent is, I don't want to. Well, I'll say it. Maybe like the adults in the room, right? When it comes to tariffs, things like that. And I thought he would be the one pulling back. So for him to support universal tariffs, 2.5%, ratcheting up month after month. Surprising. That tells me that whatever plan they had before that was probably a lot worse, and maybe he pulled it down to this, right? So anyway, more to come. I'm sure we're going to be talking about tariffs for the rest of the year.
Yeah, we've said before, there's Bessent and is it Bessent? I think it's Bessent.
Yeah, Scott Bessent.
Yeah, Bessent. And then Larry Kudlow, another advisor for President
Howard Lutnick, the Commerce Secretary.
I mean, at least I'm not sure about him as much, but the first two I know weren't too warm and fuzzy about tariffs, what they've said before. So you always kind of hoped once January 20th came around and you get a little, more real and what you're really going to do, that the calmer heads would prevail. So listen, again, we're watching it every single day. Tariffs, we'll talk about it every week if we have to. We don't really want to, but we'll see. But any final comments, Sonu, in 30 seconds or so? What should we watch for this week? What's happening? What do you think?
Look, I think this week what happened on Monday is a reminder to have diversified portfolios, not just across stocks and bonds. And I know be like gold, managed futures, things like that, but even within equities. You don't want to be too concentrated. And this week tells us why. I think now is actually like going back to our outlook, 2025. We think that the bull market's going to broaden out. And I think the conditions are in place for that.
Oh, well said. Also, why I think you should have a good financial advisor, right? We work with a lot of them at Carson Group, carsongroup.com. If you're looking for a financial advisor, check it out. If you're a financial advisor who didn't get much support from your research team during the big sell-off things that we did, we supported our advisors. So check us out, carsongroup.com. With all of that, everybody, thank you for joining the latest Carson's Facts versus Feelings, episode 120. Is Tech in Deep Seek. See how I did that? See how I did that? Yeah, see how I did that? All right, everybody. We'll see you next week. Thank you. Take care.
Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM LLC or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM LLC.